Good morning, guys. Good morning, good morning, good morning. Somebody give me a sound check. Let me know if you hear me okay. Let me see where we're at. We're gonna, okay. Give me just 1 sec. I need to figure out what I want to share. Okay. You guys hear me okay? Let's see if I see you guys in the thing. Where am I? Oh, chat ask Boris. Good morning. Anybody hear me? Share screen. This one. Share. Testing 1, 2, 3. Where is my stuff? Participants mute my audio. Speakers. Oh, good. Test speaker and microphone. Yes. Testing 1, 2, 3, 4, 5, 6, 7. Oh, fuck. Oh. Okay, wait. More view. Oh, admit all. Hey guys, okay, sorry, I had the waiting room. Okay, is everybody in the room now? You guys hearing me? You guys seeing the screen? Okay, sound is good? All right, sorry about that. It just I forgot for some reason this week I created a waiting room on function on this thing, and it it was just stupid. So good morning, good morning, good morning. How's everybody doing? We're having a good day here. I'm gonna share with you. Let me see if I can do this. Just bear with me a sec. Blah 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 blah. Let me just see if I can do this. Yeah, I can do this. I can do this. Okay. I'm gonna share with you my VPS right now, just to show you. So let me see this. Admit all. Sorry. Okay. Just trying to get everything over here organized. Okay. Super cool. All right. So everybody's seeing the screen, right? We had a big breakout in Nasdaq on the open. Obviously, that was pre our time, but this was a trade my algo took. It was both a retrace and a trend breakout trade, which actually worked well. I have some interesting thoughts, but I'm going to wait to share with you some interesting little nuanced thoughts that I had. Let's take a look at my VPS, because I want to share with you what I'm running right now. Why is this not working now? What's going on over here? . It's taking its time to show my screen. All right, bear with me. Maybe it's because I have Zoom on. Maybe I can't share this. Oh no, it's finally doing it. Ooh. This is taking forever, but just bear with me. You guys are starting to see the screen come in, right? Oh wow, it's just taking so long to pay. You guys are seeing the screen come in slowly. It's super slow. Yeah. I know. It's because I'm using both VPS and Zoom, and it's stressing the living hell out of the whole thing. Okay, so okay, so just to give you an idea, the experimentation I'm doing, I'm using a 15-minute chart for entries. Okay, I'm using trend break as my primary trend trigger. So sell trend break, I get short. Buy trend break, I get long. I've subdivided my accounts into long only and short only, right? So I'm using the exact same pairs. These pairs being the 7 majors, and then in addition to that, yen, euro yen, pound yen, euro Aussie, euro pound, Aussie Kiwi, and Aussie CAD and pound Swiss. So why did I choose that subset? It's 14 pairs. Because you could do all of them, but remember that, let's say if you're doing euro yen, pound yen, Aussie yen, Kiwi yen, CAD yen, you're just doing the same trade. You're just multiplying the same trade multiple times over. So what I'm trying to do is take the majors and then as non-correlated of subset as possible. The only thing I've duplicated was the euro yen and pound yen because they just have a little bit different volatility. But other than that, I'm trying to create as non-correlated of subset of crosses as I possibly can, just to give myself not too many skews in one direction or the other direction. Because the algo, if the yen breaks out, all the yen pairs are going to break out. If the yen doesn't break out, or if the yen sells off, all the yen pairs are going to sell off. So you're going to have essentially the same trade 5 times over. So I'm trying to avoid that because that's a very common mistake. Anyways, this is the short side, right? It was actually very, very few trades on the short side so far. Just I guess running a tiny, tiny little P&L on here. I'm obviously testing on the smallest possible thing. But the long side, let's see if I can actually show this to you. This is going to take a long time for me to hang on. Let's see if we can repaint to the long side. It's not repainting. Damn it. I don't know why it's taking so long, but yeah. All right, let's see if I can let's see if we can disconnect. Oh wow, this is so slow. I didn't realize disconnect. Why is this not disconnect? Wow, it's taking forever. I think it's me running my VPS and my MT4 and all Zoom, maybe stressing out the computer completely. We'll see. For some reason, let me see what it's doing here. Yeah, totally. Wow. Let me see if I can just close it out like this. Close window. Disconnect. Are you sure you'd like to disconnect? Yes. Okay. All right. Hang on. Just bear with me 1 sec. Let me see if I can restart this. Just bear with me a second. Let's see if I can restart it on this other window, which is a little bit smaller, but I'm just off screen right now, guys. Just 1 sec. See if it goes a little faster for me. Okay, super. So it is going faster. I'm gonna share a different screen with you for just 1 second. New share. I want to share screen 2. This one, screen 1. Sorry. Okay, so this is my VPS to the long side, to the long side. Tell me if you guys are seeing, I'm using Database Smart, you know, it's like some little provider, it doesn't matter. Tell me right now, you should be seeing balance 206. You guys seeing that? Are you guys seeing that VPS? Just give me a yes in Slack, because I just want to share this with you as I'm going. Right? Okay. So the long side created tremendous amount of trades last week, and as you can, last night. My equity, remember, I'm trading literally a dime a pip, like the tiniest amount. I'm trading very much like I do with Nasdaq, which is a 40 pip stop, 24 pip target, right? So I started with 1993. I'm basically up like 1% on dime pips with this thing. We can see on the history here. Where's my history? I don't know if I can do this even. Where is this? My account history. Yeah, P&L was $16 since last night, right? On a trading dime pips. So you know, if I was trading regular size, let's say $1 a pip, that's $160 in just one night off of a $2,000 base, which is really it's insanely good, and it doesn't hold up. I mean, it's not like it's going to hold up all the time. But the point is that you can see when you have a strong. I think last night we had a pretty strong anti-dollar move across the board. This is all long majors, so you know, short dollars, effectively long Aussie, long euros, long pounds, and you can see many hits continuously on a going basis. So just wanted to share that with you. It's still actually floating pretty decent pop. So I was 1193. Now I'm 2008. Let's just see what that is in 2008 minus 1993. That's 15. Yeah, it's basically $16 divided by 1993 is equal to it's equal to almost 1%, 75 basis points. That, you know, if I was trading on a just a 10-to-1 lever, would be 7.5% in one night, which is, you know, really ridiculous. But anyways, that being that, let me just switch screens again. Sorry. Let me switch screens here. Hang on. Let me admit all. Okay. Let me switch screens. New share. I want to share screen 2. All right, we're back to screen 2. We'll kill my VPS. But you know, again, it's just and I'll update you every day on how that's working. But it's just, you know, it's encouraging that just the first time you run this. Yeah, last night was a nice move in FX, and it's all we really need. We need a nice move. If we have one day a week where we have a nice move, this algo, by its very logical foundation, catches that move. Remember, the thing that I did, and the thing that I did that is interesting is I reconfigured everything to trend break, right? The earliest possible edge in getting trend, right? The trend break is our first and earliest signal of a possible trend taking place. So I reconfigured everything there on a 15-minute chart, and you know, and it definitely started hitting, you know, hitting trades. Like let's just reconstruct what that would have looked like in the pound. I think I actually caught both trades, both up and down. This is a 15-minute pound. Pound was down. So this is a 15-minute chart, right? So I should be long on this one. Let me see if I'm actually, am I still long on this one? No, I think I got TP'd already. Yeah, I got TP'd. Right. So this was a trade here. I got long here and I TP'd over here. This is a, sorry, let's organize this a little bit so we can see. Again, I'm trading with a 60% to risk structure. And I'm fooling around. I don't necessarily think this is advisable yet, but I'm kind of fooling around with the idea, well, can I really press my luck and go to 65% of risk structure, maybe even 70% of risk structure? So what does that mean in plain English? It means that if I'm risking 100 pips, my target is 70. Right now, if I'm for every 100 pips I'm risking, my target is 60, but I'm actually risking 40 pips and my target is 24. So I think I got long here at whatever that was. What is that? That's 66. And yeah, it looks like 66. And I TP'd it at 89, which was like right here. I TP'd over here. Okay. And that took me out. And that's a 60% to risk strategy. But if I really wanted to press myself, I could probably even push it to 70% of risk strategy. It's always a very, 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 why am I 15? And it's well, so Paul, we looked yesterday. The reason why I changed the 15-minute chart is because we looked yesterday and there was very little degradation between 15 and 1 hour, meaning that 15 was deep enough to give me a decent signal, but early enough to get me a little bit earlier into a trade, right? So when we were looking at charts, I was like, you know what? I think 15 will be okay. Let's try it. And it's basically I'm trying it. We'll see if the only way is by experimenting, right? I'm a huge believer in experimenting in the marketplace. Not, I'm a huge believer in experimenting versus testing. And the reason why I'm a huge believer in experimenting versus testing is because testing only tells you about what happened yesterday, which doesn't matter. Yesterday is never going to be the same as today and tomorrow. And what I want to know is what's happening today and tomorrow. Yeah, I like, 15-minute chart seems to, especially for this kind of a structure where we have to have a lot of things go our way. Remember, first the moving averages have to turn, then the breakouts have to happen, then the trades have to happen. There's quite a lot of lag here to give you some confidence that continuity is in the air, right? This was a short trade, I think, and this was another trade that worked. This was a pretty big trade, I think. What I take so this closed at 35, and the low over here was 6. Remember, we're only looking for 24, so that was another one. And that's really the art of this setup. This setup kind of, yeah, it's very possible. Sure, you could run a million back tests, Paul. Zero value, zero freaking value. I run them just to kind of make myself feel good. But they mean nothing. I've run a million back. The single worst mistake you can ever make is to run a back test, in my opinion. Okay. The only thing that matters is what's in front of you. Right. There was this great movie called Gumball Rally with a great 1980s movie star called Raul Julia, who unfortunately died very, very young. He used to be, he actually lived in my neighborhood, and I actually knew him. He was a big movie star in his day. And he plays this crazy Italian driver. The whole movie is all about this illegal race from the East Coast of the United States to the West Coast of the United States by all these different cars that try to make it across country. Whoever wins has bragging rights. It was called, it was actually like a real life race, and they made a movie, like a fictional movie with it, with Burt Reynolds as one of the stars. It was like a big 80s movie. But anyways, he gets into the car, and the first thing he does, he gets into this tiny little Italian, racing car. The first thing he does is rips away the back mirror, the rear view mirror. And he says, "What's behind me doesn't matter." And I always thought it was the funniest line in the world. And it was actually kind of like, that's the attitude you have to have when you're trading, because whatever is in the rear view mirror may make you feel good, but it means zero as to what is in front of you, which is why the only important data. No, is everybody okay? Cheryl, guys, can you say yes? Are you seeing me? Are you good? Okay, all good, Cheryl. Karen, you lost. We all lost Zoom? Okay, all good? Okay, Cheryl, log in, please. All right, hopefully Cheryl will log in. So everybody's seeing me, okay. If there's any problems, please just text me in Slack, okay? Tell me you're not seeing me, tell me whatever. Okay. So anyways, my point is that Paul, that's why my focus is always forward. I know exactly what I'm doing. I know the exact strategy I'm doing. I know the exact structure. All of that has been garnered from the past, right? Because it's all from my past trading. In other words, I've already back tested by going through millions and millions and millions and millions of minutes of charts to find that this pattern does repeat itself, right? So that's kind of the back test. But the real value of anything that you're trading is in real life testing, in real life experimentation, because you just don't know. Like whatever back test tells you, it's full of crap. You don't know what's going to happen. Which, by the way, brings me to this very interesting insight that I had overnight that I kind of want to share with you. I'm trying to see if there's anything that's going on. Everything is running away from us. So today may be one of those days where we just don't have any specific live trades setting up. I'm just looking to see, Dow is Dow is on a 50-minute right now. Let's see if it's on a 1 minute. Yeah, 1 minute's a runaway, runaway move. Yeah, this is on a 1 minute. Where's the German on a 1 minute? German doing nothing. So, what I wanted to kind of share with you is sort of an interesting insight that I had. Oh wow, I'm sorry, Cheryl. Sorry. Okay. Okay, sorry about that. Okay, so the interesting thing that I had, insight I had, is we have two very, very clear, very distinct entry structures. One is the trend break structure, right? Where when we get the trend break arrow, we just go mark it in, and we let it float, right? This is the early trade entry. And the second is the dip or the retrace entry, which is first we get the breakout, then we get the dip into the moving averages, then we get the move back out, and then we go that way, right? So both are viable. I prefer, obviously, early is always best. Early is always best, right? But there's an interesting nuance to this, and it's really, I have to go back to Nasdaq because that's really my baby to show you the nuance. There's an interesting nuance here that I think you'll appreciate. So what happens is the following. There's a very interesting characteristic of each particular breakout strategy. This, for some reason, this doesn't have an arrow, but this should have. Oh, it does have the arrow. You just can't see it. Here's the arrow. So let's take a look at the key dynamic of the trend breakout strategy. The key dynamic of the trend breakout strategy is that typically you get a big momentum burst, and most of the time, again, this is a critical thing. Most of the time, you get a retrace, right? So that means you're almost inevitably going to be in a losing state of mind for 3, 4, possibly even 5 candles, sometimes maybe even 6, 7, right? It's inevitable. It's like, I would say at least 50%, but maybe as much as 65% of the time. Just the very nature that you have big bursts, unless you have super big burst and a super big burst after that, we're going to get a little bit of retrace, right? Let's everybody agree with me on that, and let's make sure that you understand what I'm saying. Is that clear? Somebody just tell me, write me clear. Just write to me clear, so just everybody understands that the nature of the trend breakout is you're almost inevitably going to be, which is why it's incredibly important to trade with a bigger stop and a bigger target, because there's two things that are going on. You're inevitably going to have to account for the retrace motion, and then also count on or bet on big momentum flow. In other words, if you're right, there will be enough juice here for full 12 points, right? So that's why I trade this with a 20 stop, 12 forward, because I'm confident that I could at least get 12, generally sometimes maybe even 20. But let's just sort of stop at a realistic target of 12, right? So that the 20 gives me the space to absorb the profit taking. The 12 gives me the edge to pay for the stop outs. Right? Is that clear? Right? Everybody's clear on that? Give me another clear on that. Okay. So the second type of entry structure is the retrace structure. Now, what you'll notice about the retrace structure is that the dynamic of what I call a good retrace structure, the platonic, the perfect retrace structure, which is the perfect setup, the one that is supposed to work, is that it has very little retrace. It may have some retrace to its original level, but it generally has it is the bottom. It is the bottom. It is the top of the particular trend cycle, right? In other words, if it's a true retrace, that's the bottom and the trend continues in a direction we wish. If it's a true retrace, that's the top and the trend continues in the direction we wish, right? So the retrace trade has a very, very different dynamic. Even over here, it may not be the top, but it's super close. It's only like 2 or 3 points above. It doesn't challenge me much. If it challenged me a lot, that means it's broken. It means it doesn't work. It means it's a V-shaped move. And it's the exact opposite of a good trade. It's actually a bad trade, right? So the retrace trade has a much smaller room to fail, or much smaller need to fail, because of the very nature of what we're trying to do here, right? We're trying to catch the continuation of this trend. If we're basically trying to catch the top of the counter trend within trend, or the bottom of the counter trend within trend, the bottom of the counter trend within trend. Everybody sees this? As I'm not even, honestly, I haven't looked at this chart. I'm just going backwards randomly, and you can see how the arrows are confirming my thesis here, in a sense that if it's a good trade, it doesn't have it almost has no retrace, right? Okay, everybody's clear on that? Give me another clear. Okay. So you have these two very, very distinct, very different price dynamics on these two particular entries, right? So on the first entry, we need a larger stop, larger target, because it's early, it has a lot of momentum, but it also has a lot of retrace. We have to accommodate for all that, and that's why we traded with a 2012. On the second entry, the retrace trade, we can afford a smaller stop, but we also don't have, like, sometimes we can, we can have this kind of move, but very often it's actually a very limited move in the direction of the trade. So we can truncate both the stop and the target. So in this particular case, let's say we're using Nasdaq as our template, we can literally cut it by half. So the stop is 10, the target is 6, right? Again, I'm staying to my 60% of target structure, but I can cut it to a half, right? So depending on which entry criteria you choose, you can create a very, very different volatility signature because of the very nature of what you're trying to do. Is that clear to everybody? Give me a clear. Let me know. So the final interesting thing about all of this is you can then skew skew the way you want to. And remember, the beautiful thing about our setup is it's literally two completely different strategies. One addresses the long side, one addresses the short side. Each side can be traded differently, both in scale and size and structure, but it can also be traded differently in terms of entry, in terms of simple entry, right? And this is where some human interpretation could come in if you wanted to. This morning is clear. It was clear, like even from European time. Basically, you wake up in the morning and Nasdaq is green, right? Just the fact that Nasdaq is green tells you that there is a buy-side bias, right? So if Nasdaq is green, or whatever instrument, if whatever you wake up, the instrument is green, and you say, okay, it looks like it's a buy-side bias. Obviously, you wait for the news flow. You know, if it's currencies, you wait for the news flow to see if the bias holds. But generally, there's, you know, like Krasi was saying, you know, today was a good day for FX. Today was a good day for anti-dollars because it was kind of a risk-on move, right? Clearly, the feeling doesn't always last. Clearly, you know, the structure doesn't always contain. But even if it doesn't last, let's say you start with that assumption. You say, okay, it's a risk-on move, so it's a buy-side bias. So then what I want to do, when I wake up at 4 in the morning, is I say, you know what? I'm going to trade the long side with a trend break structure. So if it gives me trend breaks on the long side, I'm going to do my 20, 12, I'm going to trade the big trades. But because I have a bias to one side, I'm going to trade the short side with a dip structure, which is half the risk, half the profit. Because the assumption here is if it's going up to the upside, the corrections are going to be more shallow, right? Therefore, I'm not going to get nearly as much of a play in the correction, and therefore I don't need to make as much risk. And therefore, the most interesting and intelligent trade is the one that provides me with the least amount of risk possible. So I'm short here on this particular trade. I'm short here. I actually traded this trade in my futures, and it literally just made 6 points. I mean, that's all it gave you. Just gave you 6 points, and boom, that's it. And then the long just took off like a banshee because it was, you know, because the buy side bias. So as we speak now, we're still in a buy side bias, meaning that generally we're trading the long side and the short side with a little bit of a different, you know, with a different entry structure and a different volatility envelope. And that is super cool, because what is, you know, we can essentially take our structure, our regime, our strategy, and accommodate it to the dominant market regime of the day, and still put ourselves in the best possible position to make money from both sides, right? Like yesterday, it was all short. Like yesterday, every short I made was just like literally, it was like seven winners in a row, because it was such a on the Nasdaq, it was just a dominant short structure, right? And if you traded the long structure, you wouldn't have, you know, the long structure, you really didn't gain much on the longs. And if you traded the long retraces, you know, the long dips, you would have risked much less. And I think you actually might be mildly made a little bit of money because it didn't extend that much. But the point being is that whatever is a dominant structure, the opposite structure is kind of a retrace mode. And therefore you trade the retrace entry on the retrace mode, and you trade the breakout mode on the dominant structure. So obviously you're always going to get tripped up if the structure's completely changed, right? So if the structure's completely changed and this becomes a huge, massive sell-off, right? Let's say Nasdaq goes negative. Well, Nasdaq goes negative, like, you know, it literally goes negative for the day. You can shift your construct. You can now say, okay, I'm gonna sell trend breaks, and I'm only gonna buy dips, right? Because now the regime has changed. But as long as it's clearly on the one side or clearly on the other side, the danger is you always, whenever you have a change of regime, so if it goes up 2% and then comes back down, in the afternoon to being plus 1%, it's effectively in a downtrend at that point. And probably the breakouts will fail. But the sell-offs generally will, even on the retrace basis, are going to, make you money. So, it's not like it's a perfect strategy, because whenever you get, anytime you get caught in a regime change, you're always going to have vulnerability. But this is the minimum. This is kind of the minimum amount of vulnerability you can have, because you're always, first of all, you're always skewed to the side that's winning. You just skewed to it a little bit differently. And once the side that's winning kind of completely changes its movement, you can quickly reconfigure the algo to play to that. So yeah, I just thought it was kind of cool. And even if you don't reconfigure the algo, it's still like, the winning side is going to make more money than the losing side. Remember, the algo by its very definition is 60% to the win. So 2 winners against 1 loser puts you in a positive territory. And if you're if the long side is winning, you're running generally 3 winners, sometimes even 4 winners out of 5. And the amount of preponderance of pips that you're making on that side completely offsets the losses you have on the other side, because the losses you have on the other side are kind of like 50-50, whereas the wins on this thing are like oh wow, look at this. I'm just looking at my, I just checked my balance on the long on the long only FX, and it's up to 211. So it literally is like $20, which, I mean, I know it's nothing, it's minuscule, but it's like, it would be $200 if I was trading large size, which is really huge. It's like 10% on a day. So I mean, that's the whole point. Anyways, I just thought that was kind of really, really interesting. I don't think you could, I think when you're running FX and you're running 14, 15 different pairs, when you're running a big portfolio, those kind of regime shift changes are just too difficult and almost unnecessary to manage. Just let it, I've been running it trend breakout on both sides, and then whatever side is losing is hopefully going to lose less than whatever side is winning. That's certainly proving itself true. For example, the side that's winning is up like 180 pips. The side that's losing is only down 20 pips, right? So the net it becomes much more. But when you're running an individual instrument, or maybe 2 or 3 individual instruments, let's say you're running a crypto trade, you're running a Nasdaq trade, maybe you're running a single currency trade, and you're just focusing on that one instrument as your primary trading mechanism for the day, the regime switch structure is really useful, and it makes a difference in the overall P&L. So I think today I kind of wanted to share that with you, because I thought every day we're discovering more and more new interesting things about the setup, and this is one of those things that I think is really worthwhile to consider. Where's my Dow? Okay. So we missed. I'm sorry, guys. There's really, I missed all the. I didn't even think I missed these trades, because I don't think we were even. I think we were already late when we got here. So if you assume Dow is still biased positive, then you wanted to sell this one. You would have sold this one. Remember, Dow, I really want to trade with like a 40-24 target. So my retrace trade would be 20-12. So if I'm short here at 99, I'm retracing against, what's the high? 10 is the high, and I want to go low to, well, actually, maybe it would have made 12 over here, but let's just say it made 12 over here. The point is, the short bias, the long bias, which means that I'm going to take the short dip trade, would have worked here perfectly fine. Nasdaq is just a runaway train. There's just nothing to do here. I mean, we could fool around and try to buy the dips here, but we really don't have any legitimate trades here today. So today was maybe not a day for trading, but it's definitely a day for thinking, and a day for appreciating the various nuances. What we know as of 10:39 o'clock in the morning, New York, is that Nasdaq is clear positive bias. I think the Dow, I have to look at the Dow. I can't tell if it's, I don't know what it is on a daily basis. It looks like Dow is actually negative bias for the day, right? Kind of negative bias for the day right now. Although this is a daily chart, so it's obviously very big. But so for now, Dow I think is kind of flat. Also, let's take a look at just we really don't look at this, but this is a very valuable instrument. Where's the What's the S&P? Is it S&P? Yeah, S&P 500. Okay, let's look at this one. This is something I have not traded the S&P in a while, but like, so this is a positive bias. We're gonna trade the S&P right now because this is a positive bias. The S&P, I think you have to trade with a 6 stop 3 target, like minimum, on these big breakout moves. So I see Nasdaq is breaking out, S&P is breaking out. What time? How much time do we have left on this candle? We got 43, 44 seconds. So we're gonna watch this. We're gonna mark the. We're gonna just play around with the S&P for the day. As I said, 6. I don't know if 6 is going to be enough on CFDs, but let's give it a shot. So okay, we're in at 83. Actually, in at 84. In at 84, I'm targeting 87, and my stop would be 78. Okay. Let's see if we can extend to 87. I mean, that's a big extension, but let's see if we can, if we can get that. So I'm in at 84. And I know the S&P is a tougher trade to trade on CFDs because it spreads and it doesn't move that much. And this may actually just take a very, very long time to develop. But if if you're trading positive bias here, you can clearly see that it made 3 points here, but the 6 stop with a breakout. Can this make 86? We'll see. We'll see if it eventually pulls over there. But it's the only legitimate trade that's set up for us today. So we'll let that float as a potential move here. Let me see what the German is doing. German is doing nothing, and let's see see if there's anything on the currency side. I had the euro yen obviously gave me a great long trade today. Dollar CAD is a short. Is that it's an hourly signal, so that's pretty good too. Let's see what is on the 15-minute chart. See, by the way, Paul, you were asking me why don't we go to the 15-minute chart? Because you see how much earlier and how much better the 15-minute chart was. I mean, yes, there was a lot of consolidation, but it really gave you very, very little heat, very, very little retrace on this move, and it puts you in a much more profitable structure. I mean, that's why we like the 15-minute chart. Where's the pound? Nothing going on here. I'm sorry, guys. It's just like I got nothing going on here. 15-minute on the in between the zones, so nothing really happening here. You can see, with dollar yen was a massive breakout. Now, sort of like the next big conversation after we really master the trend breakout structure, which is like really master the trend entry, which is what we're really working on, is our initial first trend entry, which one is better, which under which conditions, so on and so forth. The really big trade is obviously, of course, in capturing the long profit. That requires a 2-entry structure and a whole bunch of probably additional rules that we'd have to consider. But we're not there yet. But I'm just saying, obviously being early, 1 out of 3, maybe 1 out of 4 times, we have this opportunity, for massive moves. And when we get that opportunity, we should be able to put ourselves into those big trade Oh, Connie got knocked out. Hey, Connie. Yes, so compressed market. So Boris asking a really great question. And again, I'm going to go back to the 1 minute chart because that's really where, that's really where I live on a small scale. You can see the same ideas work on a big scale. So if we look at the 1 minute chart on the thing and we get compressed markets, generally what happens is in compressed markets, when we have moving averages that are kind of very, very flat, right? Like this, right? So it's fractal. So if this was a 15-minute chart or an hour chart, it will all should generally same. You generally don't get that three candle breakout, right? Presumably you don't get the 3 candle breakout. And it's the 3 candle breakout that creates the volatility expansion that moves the moving averages wider, that creates the potential trend move, right? It's the best filter we can do. It's not the perfect filter, but it's really the best filter. And what's beautiful about this filter is it's organic to price, not derivative. It's purely price driven, and that gives you more confidence, right? So here you have a whole period. This is on a 1 minute chart, but imagine it's 1 hour. Let's imagine this euro consolidating for a day, doing nothing, kind of standing. The moving average will compress, and then eventually, boom, they decide to take it out, take a breakout. Well, now we have a legitimate breakout signal. Moving averages have separated. We have a chance for trend. See that, Boris? That's really what we're all about. That's what we're all trying to do. Does that make sense? Okay, cool. All right, I got nothing going on here. This S&P could be with us for the next 2 hours. It kind of like broke out and then died, which is fine. I mean, that's the S&P. And as I said, this is very, very, it's almost inevitable. It's not just characteristic, but it's almost inevitable that we have some kind of a retrace mode on the breakout, right? That consolidates, and then we need the second wave for it to really go higher. So we have to just be patient, see if we get a second wave on the S&P. It's the only trade we have for the day. I'll update that as the day goes by. But otherwise, today was really a day for you guys to absorb the very interesting lessons of the indicator and then apply them yourselves, for the rest of the day, across currencies, everything else, and how you want it to be. Yeah, I give out all my info. That's why, I only shared with you guys. That's why, I feel like live trading is the jewel here, because you guys are committed enough to come into live trading. You get all my best ideas. Everybody else gets scraps because they're all too lazy. So that's why I love having you guys around. Anyways, that's it for me today. Any questions? I'm sorry, some of you guys have had problems with the logins or anything else, but hopefully that's going to work out. Yeah, I enjoy having you here, Karen. I don't know if I remember saying that, Boris, and I really haven't thought much about like sort of longer term moving averages, but yeah, my whole point is early, right? There's this great line, and there's a movie called Margin Call. If you guys haven't watched this movie, it's amazing. Just catch the clips of it on YouTube. It's like one of the best financial movies ever. And Jeremy Irons plays the head of the investment bank, and he has this great speech where he basically says there's only 3 ways to make money on Wall Street. You have to be smarter than the other guy, you have to be early, or you have to cheat. And I don't cheat, so I'm going to be early. So this is my whole structure of how I try to think about the markets and how I try to think about trend is I try to be early. I don't cheat, and I try to be early. And so that's why I'm using the tools to help me ascertain as early as possible that one side or the other side is developing a move, right? Doesn't mean it always works. Of course, it doesn't always work. But it's supposed to, hopefully it works more than random. I'm not so sure about the smart part. But yeah, anyways, it's a great clip. It's just like, hang on, it's so good that I got to go find it for you guys. Just 1 second. I'm going to find it and I'll clip it. Hang on a second. It's so good. Oh, man, my computer is just like so slow now. I think it's because I'm running the Jeremy margin call speech. Here we go. God, it's so popular that it's like you can. Here it is. Here, wait. I'm just gonna. You guys can watch it at your own leisure because I don't want to subject you to it. But it's such a great clip. Anyways, so that's it, guys. We do have a dip now, a dip trade in the S&P, which is just right now hopefully confirming that there's still a little bit of a buy side bias here. We'll give it a shot. As I said, the S&P is much less of a momentum breakout trade than Nasdaq, but it's still it's still quite good. I mean, you have the signals here. Let me see if we had S&P was a very mild buy side bias, and if you're using a kind of a 6-point stop, you can sort of it will just it'll maybe float for a couple of hours without any movement, but eventually take you in the direction that you want to go, hopefully. So we'll see if we get a continuation. Right now the market is pausing. It'll be interesting to see if it gets a little bit more of a juice, but it really feels like we have the hope of Biden further stimulus. Definitely U.S. consumers coming back with a vengeance. Numbers have been pretty good. It just seems like there's just generally pretty positive equity sentiment today. All of that hopefully translates into a more positive trend for us and carries us to profit. All right, guys. Everybody have a great day. We have, what's today? Is today Thursday? Or today? No, today's Wednesday. So we have one more day tomorrow. We get together. We'll have absorbed a lot of the stuff for the week this week, and we'll see what trades develop and what trades happen overnight. I'll go through anything, and then any questions you guys have, think about them tomorrow, and I'll be happy to answer them. I'll see everybody tomorrow. Everybody have a great day. Looks like we're moving up in our direction. We need 86, so we're looking for 86 on the stick. So we'll see if we can get that. All right, guys. See you later.